Well, let's dive into this market action here on a Thursday, and we have seen both sides of unchanged in almost all of the markets. Let's take a look right now at our corn. And on the corn board, with our quotes provided by bar chart, heck, we're going both directions on the same table. So we have the nearby May contract 5 3/4 higher. That one actually goes into delivery tomorrow. A lot of anticipation of that. On the July contract, we're 6 1/4 higher at 6.50 1/4 per bushel. But you have December going the other way. We're down 1 3/4 right now. We're at 5. Well, just changed now, 5.45. So that would put us 1.5 lower. In soybeans today, more of the same. We have the May contract 2 1/2 higher, July up 2. We're at 15.15 3/4. And if you look at the new crop November contract, we're 3 1/4 lower at 13.24 3/4. So bull spreading in both of them. Now, in the Chicago wheat market, we currently have July now trading 5 1/2 cents higher at 7.28 1/4. It kind of took the spurs to it here about 10 minutes ago. In the Kansas City market, we have turned off of our earlier lows and gone higher here too. We're at exactly $7 on July right now. We're 3 1/2 cents higher. And in the spring wheat market in Minneapolis, we have July currently 7 1/2 higher now at 7.39 1/2. Talk about a bouncy market. We're within a penny of our high of the day and off of our earlier low by 14 1/2 cents. So yikes. On the cotton market here, we have that July contract now trading at 86.63 per pound. That is down 289 points. Big move to the downside today. December down 232. Let's sort it out with help from Ted Seifried of Zaner Ag Hedge in Chicago and talk about all this. Choppy, 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 choppy. That's the word of the week here so far. And I don't know if we can expect anything else for a little while here, Ted. What's going to drive the market?
Yeah, great question. I mean, we've had a really, really high amount of volatility here this week. I mean, it's been up, it's been down, it's been all over the place. What May corn went from limit down to limit up to back to down 10 yesterday. So just wild, wild stuff. And this is happening a lot of because of what's going on with May corn going into the delivery period. That May-July spread has been just wild ranges here in the last couple of days. So as that May contract works out of the open interest, I think coming into today, there was only about 28,000 contracts left in open interest. That will kind of settle things down a little bit. But look at this. You know, I mean, a lot of people will say that when we see volatility spike like we have here this week, a lot of times it's saying that we've got a near-term high in. And you do get that feeling that the new crop contracts in both corn and beans kind of want to lead the way lower because it feels like we were really picking up on planting and our longer-term forecast looks pretty good. We were only about 3% behind in corn and pretty much even in beans at the end of last week. And I think we're going to see a jump on that. I think there was a lot of urgency to get out there and start planting with these prices and with the mindset that, hey, we're behind, even though we weren't really that far behind. I think we're going to actually be ahead when we see Monday afternoon's report. So that new crop, I think, is really under pressure just based on the idea that planting is going probably, but the argument is back on the table of, hey, we're going to get more acres than what we were intending, probably closer to what the analyst guesses were going into planted acreage report. And so that's providing a little bit of pressure on new crop, but it's still a very tight situation in old crop. We've got the story. It's a tug of war on the board right now. And it's pretty wild to watch.
Well, that it is, and bull spreading apparent in both the corn and soybeans, and it has been that way pretty much all week long. Ted, we're going to break right here. We'll come back and we'll take a look at what's going on in this livestock trade here on a Thursday. We talked about our export sales numbers. We'll take another peek at those when we come back and get your thoughts next. We talked about export sales this morning. Let's take a look at the numbers. We'll start with the grain side, end up on the meat side, and on the corn export sales. Well, we cleared 1 million tons. In case you missed it earlier this morning, 1.07 million tons that were sold last week. Soybean 731,500. We had the wheat at 461,300. We also had sorghum sales of over 100,000 tons. 107,200 is what the sorghum was. Upland cotton, 93,400 running bales. Rice, 32,200 tons. Now, on the beef and pork, we had beef at 23,600 tons, and we had pork at 35,600. China was a buyer in both of them, but in each case, they were around 2,000 tons. We had 1,900 tons of Chinese purchases of beef and 2,000 on the pork. So a little disappointment to the trade. What's going on in the futures? Well, let's go to live cattle here in our quotes provided by bar chart. Currently on the live cattle board, we have June just 15 cents higher at 115.60. We're narrowly mixed further out. On the feeder cattle trade, here we go with May, 65 cents higher at 135.62. By the way, that nearby April goes off the board today. In the lean hog market, right now you have the May contract $2.10 lower, and we have June down 172 at 107.40 after a high early on of 109.22. So, Ted, what's going on here, first of all, with this cattle market today?
Yeah, so cattle look a little bit tired to me, but I think there's more upside potential in cattle. Again, box beef prices continue to be really strong. I think there's more room for cash to trade higher, but will packers pay it is really the question. We've seen cash cattle weaken just a little bit over the past week or so, 10 days. There's optimism that we're going to see some higher trade here later today or tomorrow. And if we can do that, then I think we can maybe find some strength in the cattle. But yeah, like you said, China not big on export sales. Export sales as a whole were okay. And then the weakness in the hogs. Now, like you said, disappointed that China wasn't in for a bigger number. And honestly, at a 35,000 metric ton number for pork, that's a pretty good number, but the trade wants to see more. So yes, we're pulling off the highs that we had from yesterday. Yeah, like I think you mentioned earlier, kind of maybe looking like double top or so, but I don't think that holds. I think we still have more upside potential. I think our exports stay strong. I think China will be in for more. And I'm really keying in on that August contract. I think that one still has quite a bit more upside potential as I think we're going to have just sort of a lack of animals when we get out to the late spring into early summer. So, yeah, I think that August live cattle contract has potential to go at least back to, say, 106 to 108. So, yeah, I'm looking for some strength there. And I'm looking at today's little bit of weakness as just sort of a little bit of disappointment from export sales, but I think we'll shrug that off pretty quickly.
Okay. Well, thank you, Ted, for joining us today. Excellent stuff. Ted Seifried of Zaner Ag Hedge with us today. John, I'll turn it back to you.